Hello, friends. Right now, across the United States, billions of dollars in everyday checking, savings, and certificate of deposit accounts are sitting completely frozen, legally blocked from the very families who need those funds the most. In many households, when an older loved one passes away, the surviving spouse or adult children walk into the local bank branch expecting to access emergency cash for mortgage payments, medical bills, or funeral expenses, only to find the teller window closed and the accounts locked tight. Estate attorneys and court records show that a single missing or outdated signature on file can trigger a probate process that takes anywhere from 6 to 24 months and consumes 3 to 7% of the total account value in court costs and attorney fees. On a $50,000 savings balance, that is an immediate loss of $1,500 to $3,500, all because of an outdated record created decades ago. To stay ahead of upcoming changes to banking regulations, Social Security rules, and estate preservation programs, make sure to hit subscribe to Dark Macro by Walter Berron. Tracking these administrative updates is one of the most reliable ways families protect their hard-earned assets from costly legal delays. When examining how retail banks operate across America, industry data indicates that 3 specific banking records are routinely overlooked by seniors. These are not complex investment portfolios or intricate trust instruments. These are standard paperwork items maintained at local retail bank branches and credit unions that dictate exactly who can access the money, who owns the physical contents of the vault, and whether the funds remain with the family or get transferred directly to the state government. Let us examine record number 1, the payable on death designation, commonly abbreviated as a POD account, or on brokerage and credit union paperwork, a transfer on death designation. Under standard banking laws across nearly all 50 states, when a bank account is opened in an individual's name, the funds belong solely to that primary owner. Many account holders assume that having a valid last will and testament is enough to pass those checking and savings balances directly to their children or surviving relatives. But banking regulations do not operate through wills at the teller counter. Bank contracts operate strictly on direct beneficiary records. If an account has an active, updated payable on death designation on file, the funds bypass the probate court entirely. Upon presenting a certified copy of the death certificate and valid government identification, the named beneficiary can receive the funds directly within days. However, bank audit records reveal a widespread problem. Millions of seniors opened their primary checking or savings accounts 20, 30, or even 40 years ago. At the time of opening, many banks did not routinely require or even offer a POD beneficiary designation on standard checking accounts. In other cases, the named beneficiary on file was a spouse or sibling who passed away years ago, or a former partner from whom the owner has since separated. When the bank's system shows no living beneficiary on file, the account is automatically classified as part of the probate estate. That means the bank is legally prohibited from releasing even $1 to the family until an executor or personal representative is formally appointed by a probate judge. In the United States, the average traditional funeral now costs between $8,000 and $12,000 according to the National Funeral Directors Association. When bank funds are frozen, surviving family members frequently must pay those expenses entirely out of pocket while waiting for the court system to issue formal letters of administration. Furthermore, probate court filing fees generally range from $150 to $500 just to open a docket, and probate attorney fees frequently run between $250 and $450 per hour. If the bank account had a simple, updated, payable on death designation on file, every single dollar of that balance would transfer outside of probate at zero legal cost. To review and update this record, account holders can log into their online banking portal, check the beneficiary settings under Account Services, or visit their local branch to request a standard beneficiary designation form or payable on death signature card. Most institutions allow account holders to list both primary and contingent beneficiaries, ensuring a backup recipient is formally designated if the primary beneficiary passes away first. Now let us look at record number 2, the Safe Deposit Box Lease Agreement and Authorized Signer Signature Card. Millions of older Americans rent safe deposit boxes at commercial banks and credit unions to store irreplaceable items, including vehicle titles, property deeds, family heirlooms, cash reserves, and most importantly, original estate planning documents like wills, trusts, and life insurance policies. A common assumption among families is that if an adult child has the physical key to the box, or if they hold a durable power of attorney document, they can simply walk into the vault and retrieve those items during an emergency or after the parent passes away. Here is what the legal statutes and banking contracts actually dictate. Under commercial banking regulations and state probate statutes, such as California Probate Code Section 331 and the Illinois Safety Deposit Box Opening Act, a power of attorney terminates the exact moment the principal passes away. The instant the bank receives notice of the account holder's death, access to the safe deposit box is immediately locked by the institution. If the adult child or family member is not formally listed as a joint co-lessee on the original bank lease agreement, the bank will not permit them to open the box, even if they have the physical key in hand. When this occurs, families face a severe administrative barrier. The original will needed to initiate the estate in probate court is locked inside the safe deposit box, but the bank cannot open the box without a formal order from the probate judge. Resolving this deadlock requires hiring legal counsel to petition the local probate court for a special order to open and inspect the box. An authorized bank officer must then accompany the family into the vault to conduct a formal inventory of the contents, and in many states, no items other than the will and life insurance policies may be removed until the entire probate proceeding concludes. If the physical keys cannot be located in the family home, the family is also billed for professional locksmith drilling fees, which typically cost between $150 and $400 per box lock. Bank branch officers note that the administrative solution is straightforward. Account holders can review their current safe deposit box agreement directly at the branch. If an account holder wishes to grant uninterrupted access, they can add a trusted family member as a joint co-lessee on the lease contract, which requires the co-lessee to present valid identification and sign the bank's signature card in person. Alternatively, estate planners frequently document that storing original copies of healthcare directives, durable powers of attorney, and revocable living trusts in a fireproof, waterproof home safe, with the access combination shared with a trusted family representative, prevents the entire bank vault freeze. That brings us to record number 3, inactive secondary accounts, outdated physical addresses, and state escapement rules. Over the course of a lifetime, it is common for individuals to accumulate multiple bank accounts across different institutions. These include older savings accounts opened at a regional credit union, forgotten certificates of deposit that rolled over automatically, or secondary checking accounts previously used for specific household expenses. Over time, when families move or transition from paper statements to online banking, physical mailing addresses and contact numbers on these secondary accounts often fall out of date. Under state abandoned property laws across the country, financial institutions are legally required to monitor customer account activity. If an account experiences no customer-initiated activity such as a deposit, withdrawal, or documented contact for a statutory dormancy period, which is typically 3 to 5 years depending on the state, the financial institution is mandated by law to declare the account abandoned. Once an account reaches abandoned status, the bank closes the account and transfers every dollar directly to the state government under a legal process known as escapement. According to the National Association of Unclaimed Property Administrators, known as NOPA, state treasuries currently hold tens of billions of dollars in unclaimed funds, with 1 in every 7 Americans having unclaimed cash, forgotten bank accounts, or uncashed checks waiting to be claimed. When an older family member passes away, surviving relatives usually have no record that these escheated secondary accounts ever existed. The money sits indefinitely in state custody. If heirs later discover the existence of the account, recovering those funds requires filing formal estate claims through state treasury departments, submitting certified death certificates, letters testamentary, proof of past residential addresses, and taxpayer identification numbers, a process that can take months of administrative paperwork. In addition, outdated bank records can create major disruptions for monthly federal benefits. If an account receiving Social Security retirement benefits or supplemental payments is flagged as dormant or experiences an unrecorded address mismatch, direct deposits can bounce back to the Department of the Treasury. This triggers an immediate administrative hold on monthly benefit disbursements until the beneficiary or their representative payee resolves the record with both the bank and the Social Security Administration. To address dormant accounts and locate funds that may have already been escated, the official national portal endorsed by NOPA and state treasurers is missingmoney.com, as well as the National Clearinghouse at unclaimed.org. Both platforms allow families to perform a completely free search across participating state databases by entering their name and past residential addresses. To prevent active accounts from going dormant, logging into the account once a year, making a nominal deposit or transfer, or confirming the current mailing address with the bank teller resets the dormancy clock under state law. Let us quickly recap the 3 essential bank records we have covered today, in order. First, the payable on death and transfer on death designations on checking, savings, and CD accounts. Keeping these records updated allows account balances to transfer directly to named beneficiaries without freezing the funds or losing thousands of dollars to probate court fees and months of delay. Second, the safe deposit box lease agreement and authorized signer cards. Ensuring that trusted family members are listed as joint co-lessees, or keeping critical estate documents in an accessible home safe prevents the box from being sealed upon death, and eliminates costly court petitions and locksmith drilling expenses. Third, inactive secondary accounts and outdated physical addresses. Performing routine transactions, updating contact records, and searching missingmoney.com helps families avoid state escapement, locate forgotten funds, and prevent disruptions to automated federal benefit payments. Please note that this report provides general educational information regarding public banking rules, statutory estate procedures, and government programs. It is not personalized legal, financial, or tax advice. Because state laws, probate thresholds, and institutional policies vary, individuals should always verify their specific account terms and records directly with their financial institutions or qualified estate representatives. If you found this breakdown helpful, please hit subscribe to Dark Macro by Walter Berron, give this video a thumbs up, and share it with a friend or family member who may benefit from reviewing their records. Thank you for watching, friends, and I will see you in the next report.